Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Nathan Hager, joined by Bloomberg's Valerie Teitel with good news and bad news when it comes to tech earnings. And Valerie, let's start with the good news.
Yeah, let's start with the good news.
Good morning.
Good morning, Nathan. Yes, the good news starts with Alphabet. It beat across the board, showing that this AI demand is rolling on. It beat in its cloud revenue. Its Google search revenue also came above estimates. And then the company said that it is raising its capital spending by $10 billion to $85 billion this year, citing rising demand for cloud and AI services, with the CEO explaining that this kind of investment is necessary to keep up with customer needs. It's also giving a boost to chip makers. This rise in CapEx is seeing NVIDIA rise 1% and Broadcom rise 2.4%. But this is a good beat for Alphabet. The shares are rising near 3.5% in pre-market this morning, Nathan.
And the bad news, Tesla
did miss across the board. The EV maker reported second quarter results that missed already lowered Wall Street expectations. Those shares are trading down 6% so far in pre-market trade. Revenue fell 12%, which is its sharpest decline in a decade, Nathan. The CEO warned of a, quote, few rough quarters ahead as Tesla loses EV incentives in the U.S. And last time I checked, a few meant 3 or more. So it might be safe to say that Tesla is headed for a hard year. Those shares are down 6%.
Yeah, you wonder about the Magnificent Seven, whether it should be that high. We've got more tech earnings as well. How'd IBM do?
IBM came in with a miss, actually. Those shares are down just over 5%. The company did beat on revenue expectations in consulting and infrastructure, but it did not deliver upside in its hotly watched software segment. Sales for the software unit grew slower than expected, falling short of expectations. Investors now, they have been enthusiastic about IBM's software business for the potential for future growth from AI tools and quantum computing. And that division does make up more than 40% of IBM's annual revenue. So investors were a bit underwhelmed to see these sales results for the software unit come in soft. And those shares are declining this morning. IBM down 5.3%.
And we got some earnings as well from T-Mobile. This looks like a positive story.
Positive story for T-Mobile. Those shares are up nearly 5% in pre-market trade. They reported better than expected earnings and revenue. Also reported more new subscribers than expected and raised their guidance for net customer additions. The CEO is hoping that the addition of satellite-based texting and data service will help attract and retain customers for the long term. And it seems like investors like hearing that kind of narrative. T-Mobile up 4.9%.
So we've moved on to tech earnings here in the U.S., but over in Europe, they're still doing financials.
They are. We're a bit behind over here in London. But yes, European banks are also beating on fixed income trading revenue, which seems to be the big theme. Deutsche Bank is trading up 7%. We also heard from BNP. Those shares are up 1.7% as well. Both of those banks reported better than expected trading results, mirroring the strength we saw across Wall Street. The CEO of Deutsche Bank, Christian Saving, says that results put the bank on track to meet its targets for the year. So upside for European banks, with Deutsche Bank rising 7%.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.